Welcome to Trading Lounge and the gold silver report for the winter May now, so 3rd of May. And just assuming for a moment that we have wave 4 low in place here. We don't know that yet because the move up here hasn't presented 5 waves. It's only presented 3 waves in terms of 1, 2 and 3 here, which can be an A, B and C here as a corrective move and move lower from that point. So we can remain bullish long as the market remains above the 1750 here. That's the bottom line. I mean, a little spike through is not a big deal at all, but we don't want the 1750 becoming the retested resistance. So there's different ways to count this up here. I've got it as wave 1 and 2 here, and then 1 and 2. And I've done that because we've got overlapping wave structures here. So it makes sense to count it that way in terms of remaining positive for that. So if that is the case, it would be nice to see the market lift up right from this point here, and if that's going to be the case, we can move these across here. We'll be looking at wave 3 here in green, and we would want wave 3 here to be longer than wave 1 in green here as well. So I can just move that across. So that just give you a bit of an idea. We were always going to be bullish above the 1800, but of course we can bring that down further now because it does appear that this here is in a little bit dodgy, but in 5 waves here. So that's why we've got to be careful. So an A wave, a B wave and a C wave here for this. So technically, it would be an A and a B and a C wave if that top gets taken out. Okay, so that top would need to be taken out to confirm that this move down here is corrective, because this could move up here and drop away again. So let's just go to the hourly chart and we'll just drill in on that particular space there. So from blue wave 2 here, we've got 1 and 2 and 3 and 4 and 5 here. We could go long above here. We can go long above there. We can go long above this one. Last time we spoke, we talked about it. We could bring it down to this one here. This move down here doesn't look like 5 waves, but we can count it as 5 waves once we internally, once we move in and break it down. This move from the high to low here, this is also worth understanding. I know we've been over this a lot, but there's nothing really else to talk about at the moment. So yeah, so this is the 50-60% retracement level. So if this market was going to drop, then it would drop from, you know, from this point here. Sure, it may go to the 780, but it would drop at that point. So I think, and I'm just a bit of a guess here, and we're going to try and break it down a bit further. See, normally you would see there's not much relationship between the wave C and the wave A here. Wave A is really big, the wave B is okay, and the wave C here kind of bothers me a little bit that it's like it hasn't taken much time. It's very fast compared to all of this. It has pulled back into my target area here, which is good. It does look like we've got 5 waves here and then a correction and then another move down here. But I think that this is 1 and 2 here and 3 and 4 and 5 in here. I mean, it's quite easy to see it as wave. This is 1 and 2 and 3 and 4 here. But wave 4 is overlapping wave 1 now. So that's a bit of a no-no. And when we break this down to the tick chart, we can see that it's down here. Also, too, this looks like it's like wave 1 to the upside here in 5 waves, and I looked at that on the tick chart. I think I may have looked at it with you guys as well. I'm going to go from the hourly chart not to 100 ticks, but I'm going to go to 20 ticks, because normally we look at the 100 ticks, so we're going to go 5 times smaller than that. I'm just going to bring in some data here. We don't need any of that. I just want to focus on this here. So in a bit of a nutshell, this is, let me just bring you into the fold here. That's where wave B was, and wave C here for wave 2 coming into here. And it was we've counted this before. We counted down 1, 2, 3, 4, 5 here, and then the correction here. And then in here, if we just Then I was counting this down as 1 and 2 and 3 and 4 and 5 here for the third wave, the fourth wave and the fifth wave. So it was possible to get this down here, just needed a bit of viewing in there. But the thing that really sort of caught my eye the most was the next move here. We've got 5 waves here, so we've got 1 and 2. We've got an impulse wave here, right? So we've got an impulse wave. So that means that if we get an impulse wave in the opposite direction, that means after a correction, we'll get another 5. So we could start counting the other 5 in terms of, this is where I still don't know if we're out of the woods here, but as I mentioned this morning with the Australian video, that a move above the 72 could see us, but this is where the problem will be here. I'm always looking at the bearish side and the bullish side, and sometimes it's clear and sometimes it's not. But let's just say for a moment that it was bearish. Okay, so the 5 waves up here would be the A wave, and then this would be the B wave here, and then this would be the C wave here. This is where it would finish. We can look at we'd be looking at the 50-60% retracement level. We could also go to the 76, which would be more like which is up here. So instead of going to the 61.8%, we can go to there, and I'll just put that there. So this is where the market could go to. So I was looking at this as 5 waves. Because I got 5 waves here, that means that after a correction we'll get another 5. And I think that's it here as 1 and 2 here, and then going for 3, 4, 5. So we get 5 here, that means after correction, this ABC here, we'll get another 5. But also 2 here, because we got 5 here, that means that after correction to the upside, we'll get another 5 down, and that's that C wave coming into play here. So this 1, 2, 3, 4, 5 here. So that's playing out there. So we're really stuck in the trading levels are also important at this point, because we've got the midpoint, which is 50. So here, and then after number 5, we've got 1, 2, 3, 5, and then 8, the 1780. So that's the important next level. But when we talk about the 80, we also talk about group 2, which is 65 and 72 here. And you can kind of really see the importance of it now, because it's really sitting in group 2. And while it's sitting in group 2, that is a positive thing for the upside. So if it was under the 65, then it would be at resistance at that point, and that would create another picture. So I'm saying, I'm being Mr. Negative here, and I'm saying that this market can go 1, 2, 3, 4, and 5, and finish here and drop down from that point, right? Once we're finished with these 5 waves here, though, that top there, that's where we can go long at that point. So we need those 5 waves to finish. So this is something that we're going to have to pick up tomorrow. If you're going to go long here, I'll just put that there, then you would need to put the stop just there. I can nail that right down for you. So we could put that, see this little 5 waves here, we could put that under there. We could also put it here as well. That would be fine just there. So if you're going to go long there, see this is wave 1 here and 2 here, and this is all of the 3rd wave here. So there's going to be, let's get that out of the way. I can just map this out a little bit further. I mean, it's not like there's much else to do. That's negative, so we're in the right space here for this. So we could look at this, track this up here. I've got it smaller than that, haven't I? So that would be, well, wave 1 here and 2 here, 1, 2, 3, 4, and then we need 1 more here. That would be 5, and then we'll come back here somewhere, and then we'd move up there. That would be the top of that one, and then we'd have an ABC coming back here. That would be that wave 4 at that point. Get rid of that, get rid of that. And then there'll be, that's that wave 3. And then there'll be another little 5 waves here. How long was that one? Wave 1 here. Well, we'll just borrow that. Oh, that's a bit short, isn't it? Still, that's what we got. And then I can use this one here. That would be the length there. So, yeah. We need to get these 5 waves in here finishing before we can go long safely. But all said and done, you can go long through here somewhere and you'll end up through here for that. So I'll just leave that with you there. It's just, it is what it is. So I've talked about it being negative, the negative side of it. That's where the risk is. Once these 1 and 2 here, that just seems so small, doesn't it? 1 and 2 and 3. Something's not quite right there. What have I done wrong? 1 and 2 and 3, and 1 and 2 and 3. That was that side, and that and that. No, I haven't done anything wrong, officer. I wasn't there. This, yeah. So that can go there. Anyway, we'll map that out. We'll be able to pick this up tomorrow and get a better situation with this. So I've labelled it as wave A here, but at the same time I can label it wave 1 here and wave 2 over here for this, and then we can look to be going up to wave 3. I mean, that's our original bullish sort of thing. So getting in here is really the right thing to do, but if you don't want to take on that risk, then we'll pick it up tomorrow, and once these 5 waves are finished here, then we can move into that point. I'll just head back out a bit here now. We'll just recap that a little bit on the 1 hour chart. So that's where we were. We're in here talking, and we're looking at counting this up here. In a nutshell, this move here as a corrective wave will come in over here on that low. So that will be there. We'll move this up here. We don't need it for the time being. So that's where it can fail, not the 61.8%, but more likely the 78.6. In fact, what we could do is just make that a little bit different this time. We could look at this down to here. Put it like that. That would just be a little bit easier. So we need to see if we can get past this. That's the thing. So the safe trade is taking this top out here. Otherwise, we'll pick this up tomorrow and we'll see how we go, because that's the risk area here for that. Let's check out silver. It'll be doing much the same. I was looking for a move to come down here further, so that's looking good. So all we can do here, I could go in and pull all that apart, but I don't want to burn up time. So we could probably go long above that high here now. I mean, being on group 1 would be better, but and that could also make a new low here, by the way, but that's okay where it is for the time being. We have the same thing here again as well. I don't need to go into it too much. We could look at it as blue wave 1, blue wave 2, and green wave 1, green wave 2 here, and then moving off. We could also look at this as wave 4 here as well in green. We can look at the move up here as an A wave, a B wave, and a C wave here. You know, we can dance around this all day long, but the thing is that we need to move past this 5-3-5 structure. We need to take out, you know, we've been waiting to take out this high, the second high, maybe even this one here. Support on top of group 1 of 26 here, so 26.30. that would be the best thing. So looking for the arrival, the reaction, the first high above the level, a little classic trading levels pattern. Here looking at that first high, second high above the level, that would be the safe entry point at that point. You could probably do this one here if you wanted to, but I think we'll just make that half a position. We might as well we don't need to expose ourselves. We don't want to give our money away. So look, we've just been patiently waiting for all of this to play out here. It's taken a long time, and I know that everybody's been patient, and I can't really offer anything else in terms of confidence of seeing the market move higher by looking at the yields or the dollar and those sorts of things. But we're getting there. We'll just wait. We just got to keep on waiting till we get there where it is. We can move that over to the B wave there. But the good news is, in a way, when you think about it, is that if it's okay to yak a bit, say this is the level here across here. If you draw a line through here, so what happens is that, you know, when the market comes up, it can fluff around here and do all these sorts of things, you know, and this is on this side of the fence. But we can't really trade over this, because once this is done here, we need to be over this side here of the fence. And then we've got to work out, yeah, we can go long here. We could probably go long down here, but because it's gold at the moment, we can't really go long on the low here. We need to build some evidence. We need to understand a few things here, you know. But we're not on this side anymore. We're on this side. And then horizontally as well with all of this, you know, we're on this side, and we need to be on this side of the 26 here. So just breaking it down into sort of cubism, I guess, but it's helped to break things down. So this is that's the center here. That's that center line here. So we've done all of that stuff, and now we're on this side. So that's kind of where we are anyway. We just have to patiently wait for this further. Alrighty. Sorry I'm not the bearer of fantastic news, but we'll see. We'll see how it goes. Alrighty. Cheers.